Hello everyone. In this session, let us understand what is a term of the bill and the different dates appearing on the bill of exchange. Now, the term of the bill is the tenure of the bill. So, tenure of the bill may be in months or in days. So, it is specified in the bill. So, either in months or in days. Now, in months or in days, now how to calculate this term? I mean, from which date should we calculate this term? So, to calculate the term of the bill, there are two types. One is after date. After date is after a date of the bill. Okay, so it is the period is specified and we have to calculate that period after the date of the bill. Then the one more is after sight. After sight is the date when the bill is accepted by the drawee or the acceptor, or either he has seen the bill but either he has accepted it or rejected it. Either accepted or rejected by the drawee. That is the date on which he has seen the bill or he has accepted the bill, or either accepted or rejected the bill is the date that has to be calculated for the term of bill in the case of after sight. Then in the case of promissory note, since promissory note is prepared by the buyer himself, wherein he promises to pay a certain amount of money and it need not be accepted, the promissory note after sight is after presentment of the bill. That is when he presents the bill to the seller, that is the date that has to be calculated if it is after sight. So the term of the bill has to be calculated in either in months or in days, and it has to when it is said after a date, we have to calculate the term after the date of the bill, and in case of after sight, the date has to be calculated, the term has to be calculated that on the date after the date on which it is accepted, or on the date on which it is either accepted or rejected, or in case of promissory note after sight is when the bill is presented. So this is about the term of the bill. Now, expiry or the due date of the bill. Now, the expiry or the due date of the bill is date on which the term of the bill is terminates. So, the last day on which the term of the bill terminates is known as a expiry or the due date. So, on that date, expiry or the due date, the acceptor of the bill in the case of bill of exchange, or in the case of promissory note, the maker of the bill should make a payment to the either a drawer or his order, or in case of bill of exchange to the bearer of the bill of the exchange. Now, in every bill of exchange, there is something known as grace days. So, those are 3 days. So, after the term of the bill expires, there are 3 grace days which are added to that. So, that grace days, it is a standard practice of providing 3 grace days to any bill. So, these grace days are provided, additional days that are provided to the acceptor to make the payment of the bill. So, now the date of maturity of the bill is your expiry date or due date plus 3 days. So this is a date of the maturity of the bill. But there are some exceptions to this. So in some cases, when the bill specifically mentions that it is to be payable on demand or on the presentment, this date of maturity doesn't apply. For example, in case of check is a kind of a bill wherein the payment is required to be made on demand or when the check is presented in the bank. So in that case, wherein the bill specifically mentions that it has to be made payable on demand or on the present or when the bill is presented for the payment, this date of maturity does not apply. So there are exceptions to this date of maturity, that is when your bill of exchange specifically mention that it is to be payable on the demand or on the whenever the bill is presented for the payment, this date of maturity will not apply. Okay, now let us see one example on how to calculate the due date of the bill. Due date of the bill. Now say if there is a specific date which is maintained or which is mentioned on the bill of exchange, then that date is the due date of the bill. Then when the period is number of months, okay, then the due date will be calculated. We will add those number of months to the date of bill when it is after date or to the date when it is accepted if the bill is after sight. Now this after date and after sight will be mentioned in the bill itself. Okay, so we will add those number of months to find out what is a due date. Now say in certain cases the date on which the term expires, if that date is not in that month, then the last day of the month is considered to be the due date. For example, say if the bill is drawn on 31st December 2019 for 2 months after date, then the date of the bill will be expired after 2 months after 31st December 2019. So that will be 31st Jan 2020 and 31st Feb 2020. But we do not have 31st in month of Feb. So 2020, it's a leap year. So the last day of the February month is 29. So bill will expire on 29 Feb 2020. Next, number of days. When specific number of days are mentioned in the bill, what we do is we add those specific number of days to either date of bill in case of after date or date when it is accepted in case of bill after sight. We add those number of days to the bill to find out its due date. Now say if in this case we do not consider the date of bill in calculating a number of days. So date of bill is excluded. So we take one additional day in calculating number of days. Now say if the due date is a public holiday, then preceding business day will be considered as a due date. Now if the due date is some emergency holidays or unforeseen holiday, then the bill will be due on the next following day. So this was about your bill of exchange, due dates, and how to calculate the tenure of the bill of exchange and what are the various dates in the bill of exchange. So we had an due date or expiry date, that is the date on which the bill is due. Then there are 3 grace days, which is a standard practice, and after adding those 3 grace days to the due date, what we get is we get date of maturity. So this was about the term of the bill and various dates related to bill of exchange.